Hello my fellow investors and welcome back to another earnings report analysis video. Today guys, let's actually do an analysis on the earnings for the company Snowflake. Now they did have earnings on the 30th of November, so I am a little bit late on this. However, I figured, you know what, this is a good time to do it now, seeing that it's still somewhat relevant. And Snowflake is a company that was very much hyped, at least back in like 2020 and 2021. So I'm fairly interested to see these earnings report, as well as do a quick stock analysis to see what we should be paying for this company today. So with that said, let's get started with this analysis. So let's actually come over here into Seeking Alpha, because they do have their earnings summary. We got here EPS normalized actual came in at 11 cents, which was a beat by 6 cents. EPS GAAP actual came in at negative 63 cents, which was a miss by 1 penny. So, okay, they were expecting negative 62. They got negative 63. It's still in the negatives regardless, but you know, at least they were somewhat in line when it came to this. Slight miss though. Revenue came in at $557.03 million, which was a beat by $18.12 million. Now with that stated though, understand that when it comes to those kinds of earnings, those misses and those beats are essentially based off of analyst estimates, not necessarily telling us much of anything, right? It doesn't tell us if the company is growing year over year or not. So let's actually take a look at their actual earnings report, guys, which I have pulled up right here. And like always, I will have this link in the description below, just so that way if you guys want to read it for yourselves, you can 100% do so. So let's actually take a look at this, guys. We got Snowflake reports the financial results for the third quarter of fiscal 2023. Products revenue of $522.8 million in the third quarter, representing 67% year over year growth. That's insane. That is absolutely insane, guys. They essentially just made 67% year over year growth in just the third quarter. Ridiculous. Remaining performance obligations of $3 billion, representing 66% year over year growth. 7,292 total customers. Net revenue retention rate of 165%. 287 customers with trailing 12 months products revenue greater than $1 million. Wow, that is just absolutely crazy. So from what we have seen here, all these numbers are looking very good. We pretty much have like the exact same thing over here. However, I do want to take a look at what the CEO actually said. So he pretty much just said over here, during Q3, product revenue grew 67% year over year, which is again ridiculous, to $523 million. Our non-GAAP product gross margin came in at 75%, and we continue to drive strong growth at scale, coupled with strength in unit economics, operating profits, and free cash flow, said Frank Slootman, chairman and CEO of Snowflake. Snowflake's data cloud maximizes the power and promise of data science and artificial intelligence, a high priority in modern enterprise. So not bad, right? I mean, you got the CEO just pretty much just detailing exactly what we just read when it comes to their earnings report, sure, but it actually doesn't seem to be like they're saying anything bad in the future. Now coming down here to the condensed consolidated statements, I want to see exactly what these comparisons were from today and last year. So we got here, guys, revenue. Cost of revenue, we got $334.4 million in 2021 and $557 million in 2022. Massive jump. When it comes to the interest income, we can see that in 2021, guys, it was what, $2 million, and then in 2022, guys, it was $22 million. So those are just 2 points that I would just wanted to point out, because it is just absolutely insane the massive growth that they just had within just 1 year alone. And the last thing that I would actually like to point out is this fourth quarter fiscal 2023 GAAP guidance, essentially what they're expecting in the next quarter. You can see that the product revenue is between $535 million to $540 million, which is a percent between 49 to 50%, with a 1% operating income margin. Scrolling down here though, we get to see their whole entire projection when it comes to the fiscal year of 2023, and the product revenue is estimated between $1.919 million to $1.924 million, which is between 68 to 69%. Product gross profit 75% margin, operating income 3% margin, and adjusted free cash flow of 21%. So all of these numbers look very good, and unfortunately it is 2 days later, or at least when I'm recording this, it is a day later from the earnings report when it was released But guys, take a look at this. As of today, December 1st, during trading day, guys, Snowflake went up 7.8%, about $11.14. After market day came down at around 0.55% or 84 cents to $153. Now, looking at this graph, I actually want to point out something here that, well, you could see that prior to their earnings, they were at like $133 or so. And then once the earnings came out, guys, they just skyrocketed, going from like 133 to now a share price of $154. So that's very, very interesting. They grew massively, especially on this guidance. In fact, here is an article pretty much just saying Snowflake rises on weak Q4 guidance, but analysts defend as margins increase. So the margin wasn't necessarily good, what they're expecting in the future, but they were like, you know what? They're going to increase the margins, so we're going to like it anyways, and that made the share price go up, which you can clearly see right there. Now, on the 1 year, guys, they are down 50.47%. On the year to date, they're down 53.6%. 52-week ranges are between $110.42 to $377.26. What I mean by this company being an absolute hype company back like 2 years ago, this is exactly what I'm talking about. And in fact, looking at this on the 5-year graph, guys, we could see that there was a massive rise going from 2021, like in May, that was essentially the bottom, going all the way up to like around $400, which is insane. And then it just kept crashing down to the ground. So unfortunate to a lot of people who invested this at the peak, you probably lost a lot of money and you probably still are down a significant amount. However, let's actually see what this kind of free cash flow actually says when it comes to this. And maybe at the current share price, maybe it might be a good buy, or maybe we may want it to come down even more. We got the ticker symbol of SNOW, market cap of $49.3 billion, a PE of NA, so that's already concerning. A current share price of we just saw of $154, no dividends, which means that all of their cash flows going straight into themselves. Taking a look at these fundamentals, guys, we got the net income decrease on the 5-year, going from negative $178 million to negative $675.6 million. Guys, that is a consistent decrease of 280%. I wouldn't say consistent because 2 years ago to 1 year ago, they went up slightly, but guys, it's still a decrease 280% on the 5-year. When it comes to the free cash flow, we got 5 years ago of negative $146.1 million to 1 year ago of $383.4 million. That is an increase of 362% with an average of $11.14 million. Now, this free cash flow, okay, it's in the positive these past 2 years, which, by the way, full disclosure, I forgot to mention, this 1 year ago value is actually this current year. Snowflake doesn't have exactly 5 years of data plus the current data, so I'm essentially taking from 4 years ago to today, making today the 1 year ago value, but just understand that this is today's value. So only the past year and this year is when they're in the positive, which is again good, but not consistent enough for me to actually like it. When it comes to the revenue, this is a very, very massive increase, going from $96.7 million 5 years ago to $1.86 billion, billion with a B, increase of 1,823.89%. Massive increase, guys. Total assets minus total liabilities, they just had a massive spike from 3 to 2 years ago. So again, that's really insane, going from $391 million to $5 billion. Average assets is around $4.3 billion. Average liabilities is $1 billion. Doing this difference, we get around $3.3 billion. Cash flow minus liabilities is actually going further and further into the red. As of 2 years ago, they were at their lowest at negative $1.5 billion, but as of today, they are bringing this up to around negative $1.4 billion. Average cash flow minus the average liabilities, we get around negative $1 billion. Shares outstanding. This is the one that just completely turns me off into this company when it comes to investing it, because they're diluting you to no end. Guys, take a look at this. 3 years ago, 55.5 million shares. As of today, 320.1 million shares. That is an increase of 737.96%. Just bring it up to 738% when it comes to share dilution, guys. And well, from the previous year to the current year, there's another increase around 2.5%. The reason why I think they did this is because they're looking at the share price. They're like, $400? No, we're going to issue a bunch of shares. We're just going to issue a bunch of shares and make that capital that way, so that way we don't have to take on more debt. I think that's the reason why they did it. I fully understand why they did it, but the fact of the matter is that that's not a good thing, right? That's really not a good thing. They're diluting you. I understand they're very growth oriented, but they're still hurting you as the investor. And lastly, when it comes to the cash equivalents, they currently hold $819 million with an average of $593.72 million. Okay, so now let's make some assumptions, low, medium, high, using revenue growth, predicted share buyback, and the required rate of return. Guys, the revenue growth, okay, Seeking Alpha has this thing at like 70%. And we just saw that their Q3 represented 67% of the revenue growth year over year. I'm not going to put this, okay? This is insane numbers. I do not want to put that. I'm going to go a lot more conservative in going 5, 6, and 7% for the revenue growth, and a predicted share buyback of -7, -6, and -5. This means that they are going to be diluting you. They're going to continue to issue shares in the next 4 years of 7, 6, and 5%. Guys, doing this, we get a target share price of $152.87 to $166.96. Not adjusting for debt, and then adjusting for debt, $308 to $336.36. Adding a margin of safety of 5, 10, 50%. This puts me between the ranges of $261.91 to $319.54. So the fact of the matter here is that after debt target share price, this jumps massively. They really don't have a lot of net debt in comparison to their cash and equivalents. However, take a look at these target share prices when it comes to not adjusting for debt. Guys, the current share price is 154. So we are between the low and the median assumption. This actually came as a surprise to me because I know this company and I know how hyped it was. Like, I'm looking at these fundamentals and I'm just like, nah, I'm gonna get like something stupid. I'm gonna get like $10, and it actually turned out to make somewhat sense. Like, it really did make up a little bit of sense over here. I'm not saying that this is a good investment. We just looked at their fundamentals. In my personal opinion, it could be a whole lot better, but when it comes to a target share price, guys, at least not adjusting for debt, this is looking like a pretty good price to buy it at. And if you believe my target share prices after debt, this is even looking even better. So it's just another example that if you would have bought this at $400 and I would have analyzed this at $400 and I would have been like, oh yeah, this should be worth at like 150 to like 166. I'm pretty sure I would have gotten a lot of haters being like, there's no way it could fall there. It has fallen there, right? It has fallen there because at the end of the day, companies follow their fundamentals. So this is essentially my analysis when it comes to this. Obviously, this is not financial advice, guys. Please have these calculators. Make your own assumptions. If you really do believe that Snowflake will do 67% in the next 4 years because they've done it this quarter, you could just put it in right there, right? And you can essentially get the target share prices. I don't know how convincing those numbers are. You guys are looking at it, but you do what you guys want. I'm not here to tell you what to do. You do whatever you want with your money. At the end of the day, every investment is the present value of all future cash flow. So please have these calculators. It's available for free. All I'm asking for in return is just like, subscribe, comment. It really does help with the algorithm on YouTube. I take those sponsorship, guys. I've actually had a couple friends ask me, why don't you talk about the whole FTX thing that's recently happening? And I'm just like, I'm not really a fan. I just, I got my stuff that I want to talk about. I don't want to get into drama, but the whole FTX thing, guys, is the reason why I do not want sponsorships, at least those kinds of sponsorships. I always said, if I'm going to take a sponsorship, it'll be like safe and ready meals, right? Safe and ready meals, food, stuff like that. That's pretty much it. So the best way that you guys can help me in my endeavors when it comes to YouTube, guys, is just help me grow my channel, like, subscribe, comment, tell your friends. That's really it. So I really do appreciate everybody doing that. So far, we're almost up to 1,600 subscribers. Y'all insane. Thank you all so much. I really do appreciate it. So all in all, when it comes to Snowflake, honestly, it surprised me. I was not expecting the numbers to actually work out. That was very, very surprising. Am I going to invest in this company? No, I don't like their fundamentals, right? It could be a whole lot better. We did see a lot of negatives, massive share dilution, etc., etc., etc. It's understandable why they did those share dilutions. They're a growing company. Obviously, they want to grow capital. I still don't want to be diluted, right? It is what it is. If you guys want to be diluted and still invest in it, that's on you. But for me, it's just not really my cup of tea. This is definitely a company, though, that in the future, if they do end up paying a dividend or if they just become like a Google kind of thing, that would be awesome to invest in it, assuming that their fundamentals do get better. But anyways, that pretty much does it for this video, guys. Like to feel like, comment, subscribe. It really does help with the algorithm on YouTube. You guys can follow me on my YouTube sites. Link in the description below. So with that said, peace out, and we'll see you all in the next stock analysis video as well as earnings report.